Hi, welcome back to Joe Blogs. This video is the next in a series looking at the fallout of the collapse of FTX, the cryptocurrency exchange that was created by Sam Bankman-Fried that was originally valued at $32 billion in January 2022 and is now in Chapter 11 bankruptcy. And the reason that I'm posting so many videos on this topic is that the fallout of the FTX collapse is still going on because the domino effect, the knock-on impact of all of these losses is being felt by lots of other large cryptocurrency businesses. And in today's episode, I want to talk about one of the celebrities of the cryptocurrency markets, Cameron Winklevoss. Now, Winklevoss and his identical twin Tyler came to fame around 20 years ago when they sued Mark Zuckerberg, claiming that they came up with the original idea for Facebook when they were all students at Harvard. And eventually Mark Zuckerberg settled that case and paid the Winklevoss twins $65 million. They then went on to start buying a lot of Bitcoin and became billionaires from their holdings, and then subsequently went on to create an exchange called Gemini. And that exchange has now been caught up in the fallout of the FTX collapse. And the reason that Gemini is now on the verge of losing a large amount of cash is that it gave $900 million worth of cryptocurrency to another business called Genesis, which is owned by a group called Digital Currency Group. And Cameron Winklevoss has now accused the owner of Digital Currency Group of co-mingling all of the funds that it's held and not being able to repay any of the money back to Gemini as a result of being illiquid. So in today's video, I'll have a look at Gemini and Gemini Earn, which was the product that got the company into difficulty. We'll have a look at Genesis, which is the business that Gemini gave $900 million over to. We'll have a look at the Digital Currency Group and Barry Silbert. We'll then talk about the implications of the FTX collapse on both of these entities. And then finally, we'll have a look at this letter that Cameron Winklevoss has posted on Twitter, which is quite inflammatory and has lots of really interesting accusations in there, but also has been used by Cameron Winklevoss to try and deflect all of the responsibility that he has to his customers onto Digital Currency Group. And then finally today, I'll wrap up with my summary as to what I think is likely to happen here and what the implications of all of this are for the cryptocurrency markets. So before we get started, if I could ask you to give me a thumbs up at some point during this video, if you're enjoying the content, please subscribe if you haven't done so already. Don't forget, I always include chapters, so if you don't have time to watch everything, you can skip over things. And if you'd like to support the channel, please have a look below where you'll find links to YouTube super thanks and membership, as well as Buy Me a Coffee, Patreon, and Amazon shopping links. And once again, I'd like to say thank you so much to everybody that has supported the channel. I really appreciate it. So as I mentioned at the start of the video, Cameron and Tyler Winklevoss, who are both ex-Olympic rowers for the USA, were paid $65 million in a settlement after accusing Mark Zuckerberg that they had the original idea of creating Facebook. Now, the Winklevoss twins then went on to invest a lot of this money into Bitcoin. So they were very early investors into the crypto markets. And it's reported that between them, they hold around 70,000 Bitcoins. So at the peak of the market back in November 21, when Bitcoin was priced at around $65,000 per Bitcoin, their holding was worth around $4.5 billion. Now, obviously, Bitcoin prices have fallen significantly since then. But even at today's prices of around $16,000, that holding is still worth more than $1 billion. As a result of their interests in the crypto markets, the Winklevoss twins created a cryptocurrency exchange called Gemini back in 2014. So this was an online business that offered customers the opportunity to buy, sell, and store cryptocurrencies in a very similar way to the FTX exchange that was established a few years later. And as the cryptocurrency markets grew and demand for cryptocurrency increased, Gemini did very well. And in November 2021, at the peak of the crypto markets, Gemini raised $400 million from a group of investors, including Morgan Creek Digital, which valued the company at $7 billion. Now, when Gemini started out, it was simply a cryptocurrency exchange, but the Winklevoss twins wanted to expand the offering to its customers and started offering a product called Gemini Earn. So basically, this was a way of earning interest on your cryptocurrency holdings. So if you went onto Gemini and bought some Bitcoin, rather than just holding it in your digital wallet, you could actually earn up to 8% interest by agreeing to the terms and conditions of the Gemini Earn product. And the reason Gemini was able to pay credit interest to all of its customers was that it was lending all of these cryptocurrencies to other exchanges who were then doing other things with them and paying a return to Gemini of more than 8%. So this was a very creative way of Gemini being able to earn money on all of its customers' holdings and skim the difference between what it was earning in the markets and what it was paying its customers to make Gemini a very nice profit with no risk from Gemini's perspective, because all of the capital was their customers' capital. Now, rather than spreading its list and setting up relationships with a number of cryptocurrency lenders, Gemini decided to put all of its assets with another company called Genesis. Now, following the FTX collapse at the start of November, Gemini suspended the withdrawal of all cryptocurrency assets relating to the Gemini Earn product and placed the full blame for this onto Genesis. On the 16th of November, Gemini posted the following statement on its website. We are aware that Genesis Global Capital, the lending partner of the Earn program, has paused withdrawals and will not be able to meet redemptions within the service level agreement of 5 business days. We are working with the Genesis team to help customers redeem their funds from the Earn program as quickly as possible. The past week has been an incredibly challenging and stressful time for our industry. We're disappointed that the Earn program SLA will not be met, but we are encouraged by Genesis and its parent company Digital Currency Group's commitment to doing everything in their power to fulfill their obligations to customers under the Earn program. We will continue to work with them on behalf of all Earn customers. This is our highest priority. We greatly appreciate your patience. So as you can see, all responsibility for the freezing of withdrawals from the Gemini product has been placed firmly onto Genesis. Digital Currency Group, or DCG, was founded by an individual called Barry Silbert. Now, Barry Silbert is an American citizen who originally started life as an investment banker working for Houlihan Lokey. He established a stock trading platform called Second Market, which was sold to NASDAQ in 2015 for an undisclosed sum, but rumoured to have been in the tens of millions, making him seriously wealthy. And as soon as the sale completed, he used the capital to create the Digital Currency Group. Now, DCG is one of the big players in the cryptocurrency market and has 5 distinct businesses within it. Grayscale is the currency asset management arm of the group and reportedly has around $50 billion of assets under management. Genesis is the crypto lending and brokerage business. CoinDesk is the research, media and events arm. Luno is the DCG exchange and wallet business. And Foundry is the DCG advisory company. On the 16th of November, Genesis posted the following statement in respect of the FTX collapse. Today, Genesis Global Capital, Genesis's lending business, made the difficult decision to temporarily suspend redemptions and new loan originations. This decision was made in response to the extreme market dislocation and loss of industry confidence caused by the FTX implosion. Now, at that time, Genesis said that it had 175 million of cryptocurrency tied up on the FTX exchange. Now, as you may be aware, Twitter is the preferred communication tool for most cryptocurrency businesses. And on January the 2nd, Cameron Winklevoss posted the following open letter to Barry Silbert, the chief executive of DCG. The first paragraph reads, Barry, today marks 47 days since Genesis halted withdrawals. I'm writing on behalf of more than 340,000 Earn users who are looking for answers. These users aren't just numbers on a spreadsheet, they are real people. A single mom who lent her son's education money to you, a father who lent his son's bar mitzvah money to you, a husband and wife who lent their life savings to you, a schoolteacher who lent his children's college funds to you, a policeman, and so many more. Altogether, these people entrusted more than $900 million of their assets to you. They deserve concrete answers, and we are here to get them. Now, there's a number of interesting comments that Cameron Winklevoss has made in his opening paragraph. Firstly, he's quoted the exact amount of money that's been given over from Gemini to Genesis, and this is $900 million. Now, this is a serious amount of cash. Gemini was valued at $7 billion back at the height of the market in November 2021. The valuation today will be significantly less than that because we've seen a crash in cryptocurrency prices. Bitcoin in November 21 was valued at 65,000 per coin. It's now around 16,000. So that represents a fall in value of around 75%. And if we apply that same percentage to Gemini, that would mean that the exchange today would be worth around 1.75. So $900 million is a significant amount when you compare it to that valuation. And the $900 million has been taken from 340,000 depositors on the Gemini website. So that equates to around $2,650 per person. So that's quite a serious amount of money. We're not talking $50 or $100 per customer here. But I think the most interesting thing about the opening paragraph here is that Cameron Winklevoss is taking no responsibility whatsoever for the money that Gemini has lost for its customers. The product that Gemini was offering to the single mum and the policeman and the school teacher and all of the other people that he referred to was a deposit product. Those individuals trusted Gemini with their money and wanted to earn some interest on it in the same way as they would do with a bank. And I'm absolutely sure that all of these customers thought of Gemini in the same way as they think about their bank. You put your money on deposit, you get paid a small amount of interest. What they didn't know was that Gemini was going to give all of that money to somebody else to do something with it, and that there was a potential that they would never get any of their capital back. And now that all of the withdrawals have been frozen, I'm absolutely positive that the customers of Gemini are blaming Gemini for not being able to return that capital, rather than another company called Genesis that none of these people had ever heard of. So let's go on and have a look at what else Cameron Winklevoss has said. For the past 6 weeks, we've done everything we can to engage with you in a good faith and collaborative manner in order to reach a consensual resolution for you to pay back the $900 million that you owe, while helping you to preserve your business. We appreciate that there are startup costs to any restructuring, and at times things don't go as fast as we would all like. However, it is now becoming clear that you have been engaging in bad faith stall tactics. So the gloves are off, and Cameron Winklevoss is now starting to make accusations against Barry Silbert that he's doing things that aren't in good faith. For example, on December the 2nd, we expressed our belief that getting everyone in a room together as soon as possible would be the most productive path towards reaching a resolution. You agreed, but stated you would only do so after there was a proposal on the table. On December the 17th, the proposal was delivered to you. On December the 25th, Christmas Day, an updated version of this proposal was delivered to you. Despite this, you continue to refuse to get into a room with us to hash out a resolution. In addition, you continue to refuse to agree to a timeline with key milestones. Every time we ask you for tangible engagement, you hide behind lawyers, investment bankers, and process. After 6 weeks, your behaviour is not only completely unacceptable, it is unconscionable. Now, there's a few points that I'd like to pick up on from that paragraph, and the first one is the final word, unconscionable. Now, that isn't a word that I think most people use in everyday language, and I think what Cameron Winklevoss has done here is something that a lot of people do when they're writing these sort of letters. They want to appear super smart, they want to appear hyper intelligent, and so they put words in that people have to then go and look up in the dictionary to check exactly what it means. Well, I can tell you that unconscionable in this context means unreasonably excessive. But I think this really shows what Cameron Winklevoss is trying to do here. He's trying to show all of his customers how clever and smart and organised he is by using words like this. The other thing that he's trying to prove in this paragraph is that he's going above and beyond the normal course of duty to try to get this money back. And he stated that he's issued a letter on Christmas Day. Now that is completely unnecessary. Nobody should be issuing letters on Christmas Day. That is a holiday period. Everybody should be relaxing. But he's done that deliberately to try to prove what a legend he is, how great he is. He's working on Christmas Day. But I can tell you, he wasn't working on Christmas Day. He was getting his lawyers and other people to do all of that work while he was quite happily doing whatever he was doing. And also the fact that it was delivered on Christmas Day means that all of the work was done before Christmas Day. And no doubt they deliberately withheld it and issued it on Christmas Day just to prove the point. So there's a few things going on in this paragraph that have really been done for the sake of trying to raise the profile of Gemini and make them look like the good guys and Genesis look like the bad guys. So let's have a look at what else he's written. The idea in your head that you can quietly hide in your ivory tower and that this will all just magically go away, or that this is somebody else's problem, is pure fantasy. To be clear, this mess is entirely of your own making. Digital Currency Group, of which you are the founder and chief executive, owes Genesis and its wholly owned subsidiary $1.65 billion. This is money that Genesis owes to earn users and other creditors. You took this money, the money of school teachers, to fuel greedy share buybacks, illiquid venture investments, and kamikaze grayscale NAV trades that ballooned the fee-generating AUM of your trust, all at the expense of creditors and all for your own personal gain. It is now time for you to take responsibility for this and do the right thing. Now, this is where the letter starts to get really interesting, because Cameron Winklevoss has accused Barry Silbert of making a loan of around $1.7 billion from Genesis to the rest of DCG, and claims that that money has been used for a variety of other purposes. So the undercurrent here is very clearly a comparison to what happened at FTX, where FTX lent billions of dollars to its sister company Alameda Research, and that money subsequently disappeared. So this is obviously getting quite spicy now, and just to make it a bit more fun, Cameron Winklevoss stated that Barry Silbert's sitting in his ivory tower, hoping that things are going to magically disappear, which I think is a little bit disingenuous towards Barry Silbert, and also he's reminded him that all of the money that he's taken is school teacher and other people's money. So let's have a look at the final paragraph of this letter, which has the most explosive accusations. It's not lost on us that you started your career as a bankruptcy restructuring associate, and it's not lost on us that you've been working desperately to try and firewall DCG from the problems that you created at Genesis. You should dispense with this fiction, because we all know what you know, that DCG and Genesis are beyond commingled. Everyone takes orders from you and always has, and anything that you have done after the fact to pretend otherwise won't hold up. If instead you'd put all of this energy towards finding a resolution, we would have been done by now. Everyone would be in a better place, including you. So this paragraph's got three really exciting accusations. The first and the biggest is commingling. Now, commingling isn't a word that I'd heard prior to FTX's collapse, but commingling was the term that was used by John Ray when he was talking about the FTX exchange monies and the Alameda Research monies all being mingled together. So basically there was no segregation of the customer funds to protect their deposits. Everything was just thrown into one pot, and that meant that when money was spent by Alameda and FTX on other ventures, then the customer money was actually disappearing out of those accounts. Now, as you'll be aware, Sam Bankman-Fried and all of his associates have been arrested because they didn't protect any of those customer deposits. So commingling is not good. This is potentially fraudulent activity that could result in some form of criminal charges. So the fact that Cameron Winklevoss is accusing DCG of commingling funds is obviously quite a serious accusation. The other two accusations that have been made in this paragraph relate directly to Sam Bankman-Fried's defense against what was going on at FTX. He came out in the week before he was arrested and stated that firstly, he had no idea what was going on with Alameda Research. He didn't know that the exposure had got so large, and he was shocked when he found out. And secondly, he also said that he should have done things better. He should have set up better controls, better risk management, a better structure. But his defense was based on being naive and inexperienced. Now, what Cameron Winklevoss has done in this letter is firstly identified the fact that Barry Silbert was a restructuring guy before he started out on the crypto venture. So this means that he's got experience of how businesses should be structured. He's seen insolvency situations, and therefore he knows what the pitfalls are, and therefore should have set up DCG in the right and appropriate manner. So basically, Cameron Winklevoss is saying you don't have any defense. You can't claim that you didn't know what was meant to be done because you're an expert in this field. That's where you started off your professional career. And the other accusation that is made is that Barry Silbert is pulling all of the strings. He's the puppet master at DCG. He's stating that you decide everything that happens within the business. And this again is a preemption against any future claims by Barry Silbert that he didn't know what was going on, that other people were doing things without his knowledge or authorization. Cameron Winklevoss is firmly saying, this is your business, you're in control, you're the founder and the chief executive, and anything that's happened within DCG is your responsibility. So what's the summary and conclusion today? Well, I wanted to post this video because the ongoing fallout in the crypto markets from the FTX collapse continues and is likely to continue for at least the next 6 to 12 months. A number of companies have suspended withdrawals, but it will only be when we get to the bottom of where the cash is and who's made serious losses that we'll know what the final outcome is. So as you've just seen, Cameron Winklevoss's Gemini have $900 million worth of cryptocurrency at risk as part of this FTX collapse. Now, we don't know exactly what the situation is within the DCG Group, which Genesis is a part of, but what we do know is that that business has a number of different crypto arms to it, in the same way as FTX did. It also has a single founder and chief executive in the same way as FTX, and accusations have now been made by Cameron Winklevoss that $1.7 billion has been loaned to the other parts of the DCG Group, and that money has not been paid back to Genesis, and therefore Genesis is unable to pay back Gemini. So the big question here is, what has DCG done with that $1.7 billion? Well, when you look at the website for DCG, it has a venture capital arm, and it's stated that DCG has made over 200 investments into cryptocurrency business in recent years. Now, this is exactly the same situation that we had at FTX. Sam Bankman-Fried was buying up lots of other cryptocurrency businesses, and of course, as we've seen a fall in the market over the course of the last year or so, the value of a lot of those businesses has fallen dramatically, and we've got real cash flow problems in a lot of different entities right now. So it's likely that all of the acquisitions that DCG made are worth less today than they were this time last year. So there could be some serious losses building up on that side of things, but there could also be some speculative losses as a result of what's happened in the crypto markets. So overall, the $1.7 billion that's been loaned to DCG is unlikely to be worth that amount today and could be worth significantly less. So this could put DCG into a liquidity crisis if they can't repay that loan. And that means that Genesis, therefore, would not be able to repay Gemini, and that means that Gemini then would have a liquidity crisis of its own. So you're starting to see the domino impact, the knock-on effect of when one company such as FTX goes down. All of these other companies who were dependent upon it lose money, and therefore they can't pay their customers and their liabilities, and so it goes on. So at this stage, we have no idea what the outcome of this situation is going to be. But what we do know is that Gemini have been asking for this money since November the 16th. They've been trying to get meetings organised with DCG. DCG seem to be avoiding those meetings. So that indicates that they probably don't have either the capital or a proposal that's going to be acceptable to Gemini. And that would therefore indicate that there's going to be some real losses here. And it's not just going to be within Genesis, it's going to be Gemini, and no doubt there will be other people involved in this chain that we'll hear about over the course of the next few months. So in terms of who's going to lose money here, well, obviously the customers of Gemini who put their $900 million in the hands of Cameron Winklevoss and tried to earn some money from it, they're going to lose a significant portion of that. Now, Cameron Winklevoss is trying to avoid all blame by pointing the finger over at Genesis. However, if you're a customer of Gemini, I don't think you'd even heard of Genesis up until this point. You gave your money to Cameron Winklevoss. He said he was going to pay you 8% interest. He hasn't, and he's lost all of your money, and now he's blaming somebody else. That's not acceptable to me. He needs to take responsibility for his own actions. He can blame other people as to the reason why he's unable to repay it, but ultimately, it's Gemini who are failing to repay their customers. It's not Barry Silbert. Now, in terms of DCG and Genesis, they obviously have their own customers, and they will potentially have assets that are also at risk as part of this liquidity crisis. But in addition to the customers, we've also got the investors. In November 21, DCG raised $700 million from a variety of different investors, including our friend SoftBank, which valued DCG at that point at $10 billion. And in addition to that, as we talked about earlier in the video, Gemini raised $400 million at the same time, which valued that business at $7 billion. It's likely that the valuation of Gemini and DCG is significantly lower today. So it's likely that those investments are underwater. And the big question is, will both of these businesses survive? Because we've got a lot of contagion. We've got a lot of companies that are struggling right now in crypto, and we could see some failures over the course of the next 6 months. So we've got significant losses from both the customers and the investors. But the bigger impact, I think, at the moment is that there's a loss of confidence in the crypto markets. So everybody that had been drawn in the course of 2021 as those markets rose and looked like they were going to give exceptional returns to everybody, everybody's now pulling out of that situation, and there's a real crisis of confidence going on. And that's going to be bad news for all of those companies that need to raise more money because they're not cash flow positive yet. And it does throw the question mark as to how many businesses will disappear from the crypto markets over the course of 2023. So hopefully you found today's video useful, informative, and maybe a little bit of fun. If you've liked what I've said, then please give me a thumbs up, and don't forget to subscribe if you haven't done so already.